All right, so I began today's show with an analogy of the biggest market winners in the last decade and the peak of the Roman Empire. My next guest was inspired by something similar, the movie Odyssey, and a note she just wrote to her investors a couple of weeks ago. By the way, she's one of my favorite thinkers. I'm going to bring in now Stephanie Guild, Robinhood, and Markets CIO. All right, so I love the title here, The Siren Song, Valuations, and Skepticism. Talk about this. What compelled you to write this? What's going on?
I think it's a couple things. One is you look at like earnings growth expectations, they've shot up for 2026, right? But valuations have come down. And actually earnings growth expectations have come down for 2027. So I started thinking like, what is going through that? And,
right.
and I kind of related to the siren song because in the scene of that movie, if you think about like, you know what you need to hear, but you have to like hold yourself back.
Right.
And so that's sort of the discovery I made.
So to that point, I thought we had a chart. Do we have a chart of the other? Well, we'll bring up that chart in a second that matches what you were just talking about. But let's bring this up here as well. Quantitative intelligence. These phrases emerge from time to time and they sound fancy. But, you wrote about this in a way that feels like people should understand what this is and what's happening because it's impacting the economy and markets.
Yeah, I kind of related it more to quantitative easing, QE, and now it's QI, right? QE was lots of money flowing and interest rates very low to keep the economy moving. Quantitative intelligence is so much access to knowledge and power through AI. And what is that going to do to our economy and to the markets?
So, but do you see, like, one thing I feel is happening with the markets is that reaction to news that, like the market's always been a forward indicator. Usually the street says up to a year, depending on what the metric is. But maybe the market looks even further down the road and it's reflected in stocks, and maybe it's fair and unfair. But, yesterday, we had one major name was down 30%. Then you had another retailer today up 31%. It feels like the market may feel less efficient than it always, it never felt efficient to me.
Right. I think the market and the bond market, stock and bond market, has become, it's very much like that voting machine in the short term and weighing machine in the long term. And the voting machine is all the capital flows. You got a lot of options trading. You got leverage in the system still. And so I think that's exacerbating moves in the short term. But in the long term, some of the themes, they will shine through. It just might take time. And people are aware, because of quantitative intelligence, maybe aware of things faster. Right.
And so, I mean, you have to be maybe more nimble or maybe not as reactionary because things will come back.
I think that's, yes.
Let's talk about this. So this is the chart you had in there, and I love it because even though we've had this green dots, which are the earnings, have been up, the actual PE ratio has gone down.
Yeah.
And so what is that? But to me, when I read this, it tells me that there's more upside potential than downside here.
Yes, but I also think it's showing you, like, I think there's a difference between a split between market participants, meaning that I think institutions, because a lot of earnings estimates come from the larger institutions, that there's this level of skepticism about how much earnings can grow relative to the amount that's being spent and the amount of debt that's being taken on to do it.
That's why the gray dots are important because they start to slow down here just a little bit.
That's why valuations come down, I think.
All right, so you also wrote last week about stores of value.
Yes.
And gold rates and the US dollar. And, it felt like maybe, are you suggesting that gold is the new reserve currency or has the ability to be? We'll bring up a table here on what you say a reserve currency is.
Yeah, I don't think it'll be a reserve currency because there's kind of three components to a reserve currency, but I do think it may be starting to replace the store of value, a piece of a currency.
So it's a medium of exchange.
Yep.
Check. A store of value, check. A unit of account.
Yep.
Is it just not enough gold to be the role of it?
Exactly. Yeah. I think it won't necessarily be the thing that makes like the economy move necessarily, but it's a store of value, a safer one. And I think Bitcoin and that whole kind of shifting in the financial system, like that might start to take up the other two. So that's why I think it starts to be different.
It's interesting you mentioned that because the next chart is a chart of Bitcoin, right? Because Bitcoin all of a sudden it's coming to life.
Right, it's coming.
Now, I will say as a chartist, it's made a series of lower highs. So it comes back, but it stalls. It comes back, but it stalls. It's coming back. It didn't take out the prior rally attempt earlier this year. I think it would be a red flag if it stalls again.
I've been waiting to see if this move up is a fugazi, as I like to call it, to see if it's really real. So I haven't actually made any moves in our portfolios for it, but gold I have.
Okay, so let's talk about positioning. I'm glad you brought that up. Overweight tech, healthcare, and materials. I think that speaks for itself. We all know all the great news, some of the things that are happening. The only thing that kind of caught me off guard here, a little bit of underweight, financials.
Yeah.
Because Wall Street loves financials right now. Everybody loves the banks, some insurance companies. What is it about them that you would be underweight?
I'm just thinking about the financial system might be changing, and like history may not repeat itself, but it rhymes. It might be changing because if you're thinking about like some of the tech companies are kind of becoming banks,
Right.
in that they're backstopping compute, and like is compute a new asset class? Like these are all things that I think banks aren't necessarily part of. So that's why we've been a little underweight there.
Well, you know what? You read my mind again. This whole thing, you read my mind. Because Jackson Hole, we know it's all about Kevin Warsh trying to articulate a message, trying to calm markets, but the symposium itself, the theme is financial innovation. And it's interesting to me that Robinhood, your stock has done very well here in the last few sessions. Coin has done very well in the last few sessions. SoFi is climbing up pretty nicely. FinTech was going to take over the world a year ago. They were unstoppable. This year, they stumbled out the gate. But it's something that has to be recognized, right? There is real innovation happening in the financial world.
Absolutely. And I'm looking forward to hearing Warsh's speech, not necessarily because I think he's going to follow in the path of like Bernanke or Powell, where he would give any clues away for policy, but more that like he set up those task force. He's got a lot of interesting people on them. And I think he's going to maybe share more about what he expects for the future.
He's an enthusiast of this. I mean, he really believes AI, the AI revolution, and the productivity that comes with it. And I'm pretty sure, he probably has a soft spot for things like cryptocurrency and things like that too.
Cybersecurity that comes with it.
Right.
For sure.
Right. Great stuff.
All right. Thank you.
Always great seeing you.
Yeah, likewise.